want to learn and figure out a way on how you can develop your skills in forex trading, leverage trading, and growing your account, and even crypto trading, doing leverage trading, well, in this video I'm actually going to be showing you and walking you through the steps on how to create a perfect trading plan so it can help guide you into becoming a successful forex, crypto, leverage trader in the long run. So let's go ahead and get to it. So if you don't know who I am, I actually go by the name of Solo ETV, and in Solo ETV we discuss crypto, forex, finance, and how to actually day trade and so forth. So let's talk about what a trading plan is before we get into creating one. So what a trading plan is basically a whole strategy combined with what it is that you want to prefer to trade, what times you want to trade it, meaning like London session, New York session, Asian session, and then it goes into having a proper risk management strategy, and also most importantly goes into knowing what and who you are actually going to be trading with, so you can know the actual leverage, meaning not just the leverage but also knowing the commissions or the spreads depending on who you're working with to get your account to wherever you want to get to. So let's talk about the very first thing you should have in your trading plan. So as you guys look here, you see that I have something that says trade what you see, not what you think. Now I want to go in depth on that. What I basically mean is, I know when we get into technical analysis, we have so many different predictions of where we can expect market to go. Maybe it can go shoot down for the short, maybe it can go long. We have these predicaments where we're like, all right, I think we can either get in for a buy when it hits this or get in for a sell when it hits this. Now here's the downfall about that. The market would never react off your drawings off of the charts. So what you guys should focus on is trade what you see. Now the saying is trade with the trend and not against the trend. So if you guys notice the trend is obviously going up by creating new higher highs, higher lows, you would want to trade with the trend. If you notice the trend is consolidating, you want to know and keep that in mind. So if the obviously market is going up, going down, you have this thought process in your head that, all right, it's obviously making equal highs, equal lows. So this is going to be playing with my emotions or with my account for a bit. If the market is going down, you obviously want to look for selling opportunities, and it's that simple. So I have that here because I found this is so mandatory for me when it comes to trading, because I can sometimes off track myself and have the perfect setup, but when I have this perfect setup, I have this process is, okay, I'm going to do this. And then right when I do that, I notice the market doesn't react off of my reaction. So guys, you got to make sure you pay attention to that. Now, another thing that you guys see here is the trading symbols. Now, before we get into that, guys, you have to have a correct broker. Now, the broker I use and I prefer is StoreFX. StoreFX actually has very low spreads from cryptocurrencies, even stocks for anybody that's interested in trading like the big stocks like Apple, Tesla, Microsoft, and so forth. Not only that, of course, they have FX, which is the forex side, which is your Euro USD, your USD, and so forth. Now, another nice thing about StoreFX is that they do offer many sizes as well. So let's say you do have a small account, and I mean anything under $1,000, you are still able to grow that account by using what they're offering for the different spreads amount. Now, the reason why I prefer StoreFX, like I said, just because they have perfect low spreads. Not only that, but their withdrawal process is very, very simple and easy and straight to the point. All you have to do is send money to your StoreFX wallet. Once you send it to your StoreFX wallet, you do have different options on what you want to send it to. But once you send it to StoreFX, you can then now transfer that to your MetaTrader 4 or your MetaTrader 5 account. Once that is in your account, you are ready to go and you can start trading. Now, a nice thing about it is also the withdrawal. I know I mentioned the deposit, but this is the withdrawal process. The withdrawal process is very simple. All you will need to do is simply request your withdrawal. Make sure you send it to a active wallet of yours. Once you send it to active wallet, it doesn't take long at all to get the process going. So you guys will be able to see your money right away. Now, if you guys are actually interested in the referral program, you can actually sign up for the referral program as well and refer any friends or family. So that can always be a huge benefit for you if you're ever interested in that. Like I said, guys, StoreFX is definitely one of the best brokers, in my opinion, to trade, especially if you are into leverage trading, because you can actually ask your account from 10 all the way up to 500, which gives you pretty much an infinite number of growing your account from a $10 account all the way up to 10K, 50K, 100K. It really depends on your skill sets, but most importantly, it really depends on your mental. So now that you guys understand that having a broker is very mandatory, the next thing is finding the trade symbols. Meaning, are you interested in trading only indices like US 30 or trading GBP US or GBP Yen or GBP USD? That's very, very mandatory. Another thing I like to do is focus on gold, US 30, GBP USD, or GBP Yen. The reason being is because of time zones. Now, I prefer trading London session only because London session definitely gives me a lot more liquidation in the market volume. There's a lot of moves happening at that time. And really what I've noticed in the 5 years of trading is that gold does very well and British peers does very well during London sessions. Honestly, a lot of peers do very well during London sessions. But since I mainly focus on that, I obviously see the growth and see the potential during London session. Now, I do trade New York and London session as well. Those are really the main sessions that I trade. So having the times is very important, but is not as important. Now, what is very important in having in your trading plan is risk management. Risk management has to be one of your key factors in trading because this can change in so many different factors. And what I mean by that is I get this asked a lot. Well, Solo, what lot size should I have for a $100 account? I can't really tell you that because it also goes into your stop loss. Your stop loss varies on a lot of different things. So let's say that you are in the trade and you have maybe 10 pips out from your stop loss, 20 pips out from your stop loss. You have to keep that in mind that whatever your pip ratio is from your entry plays a huge factor as well, because you can have a standard lot, which is 1.00 in MetaTrader 4, MetaTrader 5, and your stop loss is set at maybe 5 pips. Well, you're not really risking anything in your account. So it really depends. But for me, guys, I keep it very simple. I like to look for a 1 or 2 trade, meaning that if the trade goes in my favor, I double my account. So if I do another 1 or 2 trade and the trade does not go in my favor, I'm still at break even for the day, or I'm still in profit for the day. So that's the reason why I like look for those 1 or 2 trades. Now, another thing I like to do is risk no more than 2% per trade. Now, if you look down below, I actually have something that says 10% risk on my overall account. So what does that mean is basically if I'm getting in multiple trades, I want to make sure all of these trades are not equal up to 10%. So if I get in one trade and I have a 10 pip stop loss, I want to make sure that is not equivalent to 2% or past 2%. Get another trade, same thing, another trade, same thing, another trade, same thing. And then when I put them all together, I want to make sure that trade is not my 10%. Now, me personally, I like to focus on 3 trades per day. So let's say that I lose 2 straight trades, I just stop trading. Let's say that I win one, I win another, and I lose another one. I'm done for the day. Like I said, I like to reach for the 1 or 2, so therefore I shouldn't really be in the wrong for this at all. And pretty much from there. So now, guys, that's pretty much my risk management. It's not a lot to it because I keep it very simple and straight to the point. Now let's get into the bread and butter of the trading, which is my trading strategy. So I am a Confluence trader. What a Confluence trader is, you're putting all of these different strategies, ideas into one bundle to create what we call maybe one big strategy or one big confirmation. So let's say that you are a Fibonacci trader. Let's say that you are Elliott Wave trader. Let's say that you are market structure based trader or price action trader or whatever it is, or maybe institutional levels. What you can do is put all of that together in one to create one big confirmation. So for me personally, guys, I look at Fibonacci retracement. Once I notice my Fib retracements is hit at a Fib retracement level, the next thing I like to look for is a price action movement. Price action patterns can be anything from double bottoms, double tops, engulfing candles, wicks, long tails, anything like that. Just telling me that the buyers or the sellers are in the market, I should be looking. Now, after that, I look into market structure. If you guys see here, I have market structure, wave patterns, and then I'll have candlestick patterns. Now, with price fundamental analysis, when it comes to wave patterns, this goes hand in hand with Elliott Wave theory. Elliott Wave theory is by far one of the most valuable pieces to my trading, as I focus on Elliott Wave theory very heavily, but I am not considered a full Elliott Wave trader. What I mean by that is I look at little things in Elliott Wave to figure out certain movements before I determine if the market is going to go my favor or not my favor, whatever direction it is. So guys, when you look to having this trading strategy, make sure you have it to your standards, because this is my standards. If you have or if you use indicators, that's fine. Me, I prefer not to because it throws me off in so many ways. Not saying indicators are bad, it is not. So if you do use indicators, I do have moving averages here. Moving averages that I personally use is the 200 SMA, the simple moving average. Also, I have the 50 EMA, the exponential moving average, or the 14 simple moving average. Now, I don't use any moving averages anymore, but if I was to ever pop it out for whatever reason, these are the only three that I'm going to stick to and keep it that simple. For me, I use moving averages for moving support and moving resistance, and that's about it. I know there's a lot of other different moving average strategies out there, like the moving average crossover. There's a lot of other different things out there. Me personally, I just use it for structure, and that's it. So, guys, if you ever come to the conclusion, make sure you keep your trading strategy simple and just only keep it to 3 confirmations. All right, guys, so I appreciate y'all for tuning in. Make sure you check out ThorFX so you guys can start trading right away. And guys, your boy Solo E TV, stay tuned. I'll see you guys soon. Peace.